Hi guys, my name is Nathan and welcome to the FinLab. And in today's video, I'd like us to discuss the current happenings in which the United States is gearing up to reduce its benchmark interest rates and how that would affect most African countries, especially countries like ours, Zambia. All right, so to take you back a little bit, in early 2022, post-COVID, the United States Federal Reserve, which can be likened to the Bank of Zambia here, aimed to control the rising inflation. So to achieve this, they raised the federal funds rate from near zero to a range of 5.25% to 5.5%. So the goal here was to make borrowing more expensive, thereby slowing down economic activity, to ease pricing pressures and reduce inflation. So Zambia undertook similar measures by raising interest rates, increasing statutory reserve ratio requirements, and also recalling government funds from banks, right? However, the American economy, unlike Zambia's, responded more swiftly to these measures, leading to a more noticeable slowdown in inflation. So as a result, the Federal Reserve has indicated that it may start reducing interest rates in September, signaling a shift towards an expansionary monetary policy. So one major effect of the Federal Reserve's rate increases was the enhanced attractiveness of U.S. treasuries, or you'd call them U.S. government securities. So this made them more appealing to investors worldwide. So the US dollar, being a safe haven currency, became more attractive with higher interest rates on US dollar denominated securities, which contributed to a significant strengthening of the US dollar. In fact, the US dollar index reached its highest level since 2006. But for many African countries, this was, of course, problematic as we experienced capital outflows. So investors withdrew their funds from emerging markets and frontier markets like ours, seeking the safety of US assets. So this led to a sharp depreciation of African currencies against the US dollar. Of course, other factors also influenced depreciation, such as foreign currency reserves and inflation, but the strengthening of the US dollar was a key contributing factor. So now, with the Federal Reserve planning to reduce interest rates, we can expect US government securities to become less attractive to investors. So this could result in investors shifting their focus to stocks, to gold, and other commodities. And for those investors with a higher risk appetite, markets offering higher returns, such as certain African markets, including Zambia, might become more appealing. If demand for Zambian government securities increases, it could lead to significant capital inflows, bringing in foreign currency to support the kwacha. And of course, a more stable kwacha could help slow down the inflation rate, which in Zambia is largely driven by import costs. But however, it's important to note that economic performance and current stability are influenced by multiple factors. So this outcome is definitely not guaranteed. So I'll keep watch and I'll advise. Otherwise, this is it from me. Thanks and goodbye.